please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Cyient was the stock in focus yesterday because we heard that Crore International Mauritius, a subsidiary of United Technologies Corporation, sold its minority stake in this company, Cyient, for about 651 crore rupees. That led to a wobble in the stock, but today it's up 3.19% because we overnight got information that some marquee investors have anyway purchased those shares. Ajay Aggarwal, the CFO of Cyient, joins us on the phone line. Ajay, good morning. Thanks much. What was Crore's reason to exit the stock? Will it have any impact on your business at all?
Good morning, Lata, and I really appreciate your giving us an opportunity to clarify this. Absolutely, I think the reason for Crore to divest was in line with what we all had agreed and anticipated. They had invested this in 2002 when the relationship was very new and they needed some kind of comfort from us, this being a little IP sensitive kind of work. But over a period of time, the relationship became so strong that the investment had no relationship to the relationship as a customer. The evidence of that is today we have about 1,600 engineers all over the globe working for the customer. And second reason is I would say that it is in line with their policy where, you know, any publicly listed stocks, they are all divesting them and they are not anymore keeping any such investments in their books. In terms of the impact to the business, it has no impact on the business. Actually, if you see, we have the MSAs in place till 2020. We also have done a couple of acquisitions in the last 6 months, which are driven by joint strategy between us and UTC Group, including something called B&F Design in US, a Certon company in US. They have given us a additional business on manufacturing certification. So, Lata, I can go on. I think this is in line with their strategy. It is in line with what we agreed, and it has no impact on the business.
Okay, that should be reassuring news to your shareholders, Mr. Aggarwal. But can you just tell us exactly what is the revenue contribution from United Technologies? Is it among your, let's say, top 5 clients, top 10 clients?
Yes, so if you see, Lata, our largest business is in aerospace, and in aerospace, UTC is the largest customer, and their revenues constitute about 15% of total revenues for us.
And that 15%, there is absolutely no risk to that because you're saying the agreements go on till 2020.
There is absolutely no risk to that. In fact, once the settlement takes place, there will be an announcement by the customer also to reassure all the investors.
Okay, can you leave us with a word on how business is shaping up for the rest of FY18? Q1, you reported flat dollar revenues and a 3.5% uptick in rupee revenues. I mean, it should have gotten better because of the rupee fall. That's why I'm asking.
See, there are two aspects. One is overall in business terms. I think we had talked about a guidance of double-digit growth, both on top line and bottom line. We are tracking very well on that. Q1, our services business had grown at about 3%. Next quarter, the Q2, we will have phenomenal growth. So I think we are extremely well placed to give, growth which could be double the industry growth for the financial year 18. And on the exchange rate, obviously that's a recent development. We really don't factor that too much into the performance, but I would say exchange rate should help. But without that itself, I think we are looking at extremely good double-digit earnings growth, something better than last year.
All right, Ajay, thanks a lot for your time today. The market is a bit under the pressure, and the pocket under pressure is oil marketing companies. Now, you know, Lata, last week I was raising this red flag on the price buildup of petrol and diesel for both, for all these companies, and it clearly looks like there's been some pressure on that. And we were discussing this with Mr. Surana as well yesterday. But HPCL is down.
Margins have fallen.
Margins have fallen for sure. So HPCL is down about close to 4.5 for good reason actually, because you can't be making money in all the products. I mean, if you are at the end of the day a PSU company, but
you can't be making money when the raw material is expensive and when it is cheap.
Exactly. So 4.5% gone on HPCL. But the issue is that the market had priced in the best of all the world in HPCL, IOC, BPCL of the world, and that's why you're seeing this kind of sell-off. The other stock that's seeing a bit of a sell-off right now is PC Jeweler, and I don't know if this stock was somehow holding out in a weak market, and now beginning to see unwinding. So
all those retails also are falling. V-Mart retail is down 3%, Future retail is down 3%. We should push up Avenue
3.5% low as well.
Yeah. And once the marquee guy falls, then all the retail stocks also start. I mean, here's where the market had longed up considerably, and therefore one should expect that profit taking would come there. But let's get to a bit of news we have in our long-drawn battle with bad loans. CNBC TV18 learns that another bank has offloaded its exposure in SR Steel to NARC. Ritu Singh broke the story for us. Ritu, tell us, what have you picked up?
That's right. We understand from sources that Indian Overseas Bank now joins the list of banks that have offloaded their exposure in debt-laden SR Steel to an asset reconstruction company. We've picked up from sources that Indian Overseas Bank has sold about 1,900 odd crore exposure that it had to SR Steel to Edelweiss Asset Reconstruction Company, and that Edelweiss has bought this exposure at a 50% discount to book value. We also understand that about 15% of the total exposure was paid upfront as fees to Indian Overseas Bank, and therefore IOB can now show about 285 to 300 odd crore rupees as recovery as far as SR Steel is concerned. Of course, the remaining portion will be repaid as and when some resolution is reached. Remember, SR Steel case is still in the NCLT as one of the 12 accounts that was initially identified by the RBI in their defaulter list, and the IRP is yet to float an information memorandum inviting bids for the company. But in the meantime, Edelweiss ARC has been aggregating this debt. They have over 5,500 crores of exposure, we understand from sources, to SR Steel at this moment, after several banks, including ICICI Bank, Axis Bank and HDFC Bank, sold their exposures to Edelweiss.
All right, thank you very much for that, Ritu. That's another company a bank selling off its stake to NARC. Well, let's get to the NBFC space, because there are some interesting new observations coming in from an ICRA report. This report projects that delinquency levels in NBFCs are set to rise. To put it short, people will default more from the loans that they've taken from NBFCs. Joining in is the author of that report, Karthik Srinivasan, Group Head, Financial Sector Ratings at ICRA. Karthik, good morning. In which part of the NBFC space are you sensing this? Will this be in the usual lap where everybody was worried in the housing finance companies, the lap borrowings? For the traditional consumer financing guys also, do you see trouble?
Yeah, good morning. What we've said in this report is delinquency numbers have been rising for the last couple of quarters. And in certain sub-segments, for example, microfinance and LAP, these numbers are likely to increase further. The pace may slow down, but we are definitely seeing some stress in these segments. Could go up from the current levels by another 30-40 basis points by the end of the year. To an extent, it is getting moderated because the pace of growth has been pretty decent. It's been lower than what we have seen in the past, but still we do expect a 16 to 18% kind of a growth as far as the portfolio is concerned. So which would ensure that the NPA numbers are fairly in control, though they would continue to rise. An important thing out here is, while we've said that in segments like microfinance and LAP, the numbers could go up, but the other sub-segments of the NBFC, there we are seeing some signs of stabilization, or in fact even an improvement in on the delinquency levels, which is a bright spot at this stage.
Sorry, LAP and which other segment you say?
So LAP and microfinance at the 90 plus. What we are saying is at a 90 plus DPD kind of a levels. Not all the NBFCs have moved to the 90-day norm. Okay. They would all move in by March end, but almost 3/4 of the segment has already moved to 90 plus. So our analysis is largely on a 90 plus analysis rather than a regulatory NPA classification kind of a numbers. So what we're saying is from the 90 plus numbers broadly has been stable at close to about 4.8, 4.9 if one was to exclude the MFI piece, and that should possibly go up slightly more by the end of the year.
Okay, so LAP continues to be maybe a bit of a pain point. Let's also bring in Mr. Ramesh Iyer, Vice Chairman and Managing Director, M&M Financial Services into the conversation. Good morning, Mr. Iyer. Thank you so much for joining us on the show today. So you're hearing some of the concerns which are obviously out there on the street, within the analyst community, within the ratings community, because I guess two clouds have arisen. One is patchy monsoon, and the second is now GST and how working capital cycles are getting impacted. What does that mean for your business, sir?
No, so let me first deal with the GST. I mean, so far as the final end consumer is concerned, the more or less the vehicle prices have almost stayed there because some initial discounts were offered or the price reduction were offered, and then the cess came in and possibly stabilized the price at the same level. But I think on the vehicle front, the discounts seem to be continuing. So far as the end consumer is concerned, I think GST is really not impacted as much as possibly the working capital cycle of a dealer would be impacted, because he needs to make the upfront payment and then over a period of time is what he gets a credit, etc. So the dealer is concerned, he will look for maybe a more inventory financing, a more wholesale financing from the banking system or from an NBFC. But I don't think GST at the final retail level is showing any major impact. Yes, we saw higher volumes in June because July GST was kicking in, and then we saw July correcting the volumes because advanced vehicles sales had already taken place. Beyond that, I'm not able to see GST impact at the retail level. So far as the monsoon is concerned, I think it's also important to understand, while it's been a little patchy here and there, but overall if you look at it, the monsoon has been average plus, bearing some districts in MP, some in UP, etc. But otherwise, I would personally think, from last year to this year, if you were to look at the sowing percentages, etc., I think fairly the situation seems to be comfortable. We also expect that if the yields are a little low, maybe at the state government level, a better support price could be offered to protect the cash flow of the farmer. So I am not overly worried, while definitely what we must have seen will be good through monsoon. Seems to be progressing there, but I don't think one needs to overly worry about a little patchy monsoon in some districts.
Okay. Ramesh, just hold on for a minute. There was an important CNBC TV18 exclusive that the US government has stopped giving orders to foreign IT companies. We have tried to reach out to Infosys and TCS, but they have said that they will not comment. Those flashes will come back again for you. We will try and get you more details on this, but those were important statements to note. That's the TCS Infosys statement. Can't participate in the story. We are in a silent period. But there is a worry that foreign companies will not get orders from the US government anytime soon. The government is reviewing all its IT contracts to foreign companies. We'll get you more on this. But let's continue with the story that we are checking. Ramesh, what Karthik is telling us is that loan against property loans, microfinance loans, and those who have not moved to 90-day are the places where they see stress. In which areas are you seeing stress?
No, so, fortunately for us, we've been so much rural focused, and almost all our customers are earn and pay customers from vehicles, tractors, etc. So we don't have truly any microfinance or in LAP or whatever. I think the bigger sense that I get is, the consumption loan, in the sense that someone who's taken for a purpose, and then if the cycle is getting stretched, one would always feel the pressure on those segments. So far as the vehicle segments are concerned, as I said, they are earn and pay segment, and at least in rural, they strongly depend on two streams of cash flow. One, to what extent is the rural infrastructure story picking up? Two, is the farm cash flow. Fortunately, in many of the states, we do see the farm cash flow will hold up. Last year, crop was extremely good, so we saw through the first 2 quarters. And then with the monsoon average plus, we expect November onwards, the yields will kick in, and I think the farm cash flow should hold up. So far as the infrastructure is concerned, while we don't yet see big projects at the rural level, but definitely at state levels, there are activities on the roads, there are activities on bridge, etc. And we do feel that a support from the infrastructure cash flow will also kick in post-festival. The two together, I would think rural should see a different picture as compared to the overall NBFC story, and that's been true even the previous years. While the other NBFCs possibly and the urban centers have done well, rural was going through tough time. We went through the difficult times, the 18 months. I think possibly that trend is changing as far as rural is concerned.
You don't loan to dealers at all?
We do lend to dealers, of course, yes, and but our wholesale lending to dealers is equal to the retail business that we do with them. So therefore, we have a direct connection to, if we give someone 10 vehicle loan, it's equal to the 10 retail business that we do with him, and therefore the wholesale is controlled through the retail initiative.
Mr. Iyer, you said this 18-month period of difficulty for you, that seems to be ending. So does that mean that this 10.5% level that we saw at the gross NPA level, that was the peak? Can we expect lower NPAs as we round off the year?
I think we shouldn't forget that this year we are moving to 90 days. And the 10.5 was on a 120-day basis. Yes, on a like-to-like basis, one would even see a correction. But if we were to bring in the 90-day, that would kick in. It will definitely, and because in rural, as you know, we have quarterly installments, the crop pattern loans are there, and there is no differentiation between a normal car loan or a tractor loan. So to that extent, we will have pressure normally the first and second quarter. This year, first quarter was a great quarter for us. But, next year, if we were to continue with this 90, which we will have to, which means that one would see a little pressure coming from 90 days, but those again are very temporary cash flow impact delays, and as the crop season kicks in, they will get corrected. The overall picture that I'm trying to give you is that the rural is definitely changing trends over the last 18 months to what we saw the last 2 quarters, and to the extent regulatory change will bring in impact, I think we'll live with that.
120 to 90 is not a very small change for a person accustomed to 120, isn't it, Mr. Iyer? So, how much is that pain? Because that's what Karthik is saying. His 3 buckets are, loan against property, MFI, and those who, because of the transition from a 120-day recognition to a 90-day recognition. Can you give us just a ballpark? How much could that pain be? 1%, 2%?
Let me first clarify that as far as customer, I think as far as customer is concerned, he is absolutely unconcerned about the NPA being whether 30, 90 or 120. I think he has to pay monthly installment. What we are really saying is that in a difficult time, the customers do miss their installment. Let me give you a quick example. If in the previous years, we saw anybody was able to pay in a quarter only 1 installment out of the 3 that fell due to them. So therefore, in a 6 months period, if he's paid just 2 installments, he had become an NPA because of the 120-day norm. I'm saying that is changing. Now we do see customers are paying every month. Some of them may not pay the full installment, but we do see, 50 to 55% of our NPA accounts are showing movement in collection, which means the cash flows of the market has improved. So 90, 120 is a very regulatory requirement. It's not a customer cash flow item. So therefore, if the market conditions improve, it really doesn't matter to him. But yes, when you start providing for NPA from a 120 to 90 day, one would definitely see an increase in the NPA, maybe anywhere between 1 to 2% gross NPA increase. But as the year catches up, it's a one-time impact, right? And then on, you don't need to have the same impact. But once the installment starts coming in, then you will start seeing improvement happen. So that's the point I'm making. But eventually for an NBFC like us with collateral, I think the credit loss is important and not really the NPA number.
All right, fair point, gentlemen. Thanks a lot for your time today. At 9:55, the markets have recovered quite a bit, actually. The Nifty is now at high point of the day, 97.40, and the Bank Nifty up 40 points. The mid-caps are leading the recovery once again. So let's see if that can sustain. Ashwini Gujral, Mitesh Thakkar and Prakash Kaba now join us. Ashwini, are you sensing that for now the shorts maybe just saying that let's cover? Could this short covering take the market higher from here on?
Well, there has to be some macro news which can send fear into the shorts. In fact, the news that you are getting is that, US government is going to stop all these contracts. So that'll probably take IT also lower. So, at 9,700, this is choppiness. This is not short covering or, great amounts of buying. So if anybody who hasn't gone short, I think this is the time to get short on the market, particularly Bank Nifty, where we've seen a bit of a rally. I think 9,700 will be under threat continuously, and unless you have like a gap up which keeps going, I don't think the shorts will let the bulls go because they have them by the scruff of their neck. As far as individual stocks are concerned, oil marketing clearly is under pressure. So HPCL is a sell with a stop of 407, target of 380. Balrampur Chini is a sell with a stop of 164, target of 152. And Motilal is a buy with a stop of 1250 a target of 1290.
OMCs are under quite a bit of pressure, Ashwini. Could this be the big trade of the day?
Well, it appears there is some sort of tailwind. Maybe it's rupee, maybe it's oil prices, etc. But definitely the oil sensitive since last couple of days are feeling the heat.
Okay. Yes, Mitesh Thakkar and Prakash Gaba also with us. Mitesh, good morning again. What's the nifty trade, if any, and stocks?
Good morning. So, Lata, if you were to take a nifty trade, I would suggest keeping a day's low as stop loss. You might go long for 1-2 day, but though I think my overall bias still remains bearish and I'm more inclined to sell. Around 9700, there is some support and mild, bounce backs are expected. But I think one sector which is not recovering or not really showing signs of strength is the FMCG pack, and I have 2 sell calls over there. So would suggest selling into a Godrej Consumer with a stop at 926 for targets of around 855, and Marico as well looks weak, so try to sell with a stop at 316.5. Look for declines to about 300.
Okay, Prakash is also with us. Prakash, interestingly, tire stocks are bucking this weakness. I think you've got a buy on one of the tire stocks?
Yes, Cyient and Apollo, I had a choice. I just happened to pick up Apollo tires. That looks good, can climb to levels closer to 253, stop below 241. Stocks that look weak is HPCL. I think that's sliding down to levels closer to 385 zones. Stop about 415.
Okay. Thank you very much, Prakash, Mitesh and Ashwini for joining us. Well, we can see a little bit of strength in some of those weak steel stocks. Bhushan Steel, JSL, and even the other ones, Prakash Industries, those are standing out. You're also seeing, actually today, there seems to be a short covering in some of the beleaguered stocks. Even stocks like HDIL, the real estate space, is seeing a little bit of short covering bounce, I would imagine. And then the public sector banks.
Yeah,
I don't know how long it will hold, but all the Allahabads and the Vijayas are also seeing a little bit of a short covering bounce. So there's just a little bit there. We don't know how long it'll hold.
Yeah, but you know what? I think the oil marketing companies. I think what's happening right now on oil marketing companies. I think HPCL also has an added trigger that that deal will now happen. I mean, it was always the case without valuation issue. But the reason that you were buying into oil marketing companies was that they had absolute freedom, and I think that fact that the marketing margins are under pressure, I think is having a bit of an impact. So that I think is turning out to be a bit of a rough space today.
Yep, and actually now it looks like the government will go ahead with divestment because of the need for cash immediately. And
I must, Lata, just point out, since we were talking, I mean, oil marketing companies, oil-related plays, the fall on Asian Paints is once again very, very pronounced. I mean, second day running, I guess, a crude play, Anuj, and that's why, I mean, this is one of the soft targets for the bears.
Oil play clearly works both ways, right? I mean, it's working, and it's also consumption. So right now, it's in both the baskets.
Again,
look at what's happened to Lever, for example, over the last fortnight. I mean, why are we saying Asian Paints? Why are we singling out Asian Paints? Lever also done that.
Okay. All right. I think it's time we went to the commodity space. It's 10 and Manisha Gupta is joining us. Do you have better news for us, Manisha?
It depends on what way you want it, but slight profit taking in crude oil prices, if that can be counted as good news. But remember, we have seen the prices run up so strong. And if you look at the last 3 months, the prices now are up 28% in sense of the crude oil prices. We were almost at $60 per barrel for the Brent in the markets yesterday, but we have come off that on the charts as well. This was the second straight time that the crude was trying to breach those kind of levels. But it really is the US crude oil prices which seem to be running up at this point in time. The Indian markets 0.5% on the higher side. Remember, it is the rupee calculation as well which has taken the Indian prices higher than what the global counterparts seem to be doing right now. Take a look at the gold and silver prices, and there is no good news there at all, especially for the bullish guys. The gold prices are trading at a 4-week low, silver trading at a 5-week lows as well. With the US dollar index trading at a 5-week highs, you have seen pressure come in for this space. But again, the Indian calculation, and that's what seems to be working for the bulls here. The metal space, of course, has been quite divided. In the international markets, we have seen the iron ore and the steel prices trade on the positive side. It also has to do with the strength in US dollar, which is capping too much of gains here. But apart from that, it is the quarter ending that many of the investors would want to watch out for. And of course, it is the China holidays coming in the next week. So ahead of that, a lot of positioning actually would be taken care of. On your screens, we've seen nearly a 0.25% gains come in for aluminum, nickel, zinc, etc. have been the kind of metals which have been doing quite well in the recent few days as well. But because of the uncertainty in the global markets, we have sell calls coming in from the brokerages. We have spoken to Grow Value today, and they have a sell call in nickel and aluminum for intraday markets. For nickel especially, they're looking at downside targets of around 649 rupees per kg. For aluminum as well, they expect the prices to decline a bit from these current levels, and we could be seeing lower targets of around rupees 135 per kg for the intraday markets today.